Welcome back to Roxham TV. I'm your host, Jeremy. We've got a really interesting mix of stories today because we are seeing some major shifts happening across finance, technology, crypto, and even society itself. We will start with a story that could have huge implications for the global financial system. According to a new report from European Central Bank, gold has officially taken over US Treasury as the world's largest reserve asset held by central banks. For decades, governments trusted US government bonds above anything else. Now, that might be changing. We'll break down why central banks are buying gold at record levels and whether this is a warning sign for the US dollar or simply just smart diversification. Then we'll move over to the AI race because three of the biggest private companies in the world are preparing to go public. We're talking about SpaceX, we're talking about OpenAI, and Anthropic. Together, these companies could add nearly $4 trillion of value to public market within a matter of few months. We'll look at whether Wall Street can actually absorb those IPOs of this size and why index funds could end up becoming some of the biggest buyers. We'll also have to discuss Japan because the country just released new census data and the numbers are honestly quite shocking. Japan's population is now shrinking faster than any point in modern history. The country lost more than 3 million people in just 5 years. We'll talk about why this matters, not just for Japan, but for many developed countries facing the exact same problem. We'll also jump into AI yet again, where Anthropic is sounding the alarm on cybersecurity. The company behind Claude AI says powerful AI-driven cyber attacks might be just months away. They are now expanding a program designed to help governments, hospitals, power grids, and critical infrastructure defend themselves before more advanced AI models being widely available. On the social media front, Malaysia has officially banned social media accounts for children under 16. It's a move that is generating debate around privacy, parental responsibility, and government oversight. We'll take a look at why more countries around the world are moving in the same direction and why many parents actually support these restrictions. And of course, we'll talk about the big move in crypto. On yesterday's show, we look at Bitcoin charts and discuss several warning signs that momentum was weakening. Well, today, Bitcoin dropped below $66,000. We'll break down what caused the sell off, why more than $1.7 billion was liquidated, why ETF money continues to leave the market, and whether this is simply an undercorrection or something investors should pay closer attention to. And just to stay in crypto, we'll continue our discussion on Binance's new stock trading feature. A lot of people are asking how Binance is actually able to offer US stocks inside a crypto exchange. Well, the answer is one company that is called Alpaca. Most people have never heard of it, but it might be one of the most important infrastructure companies connecting crypto and also traditional finance. We'll explain how it works and why tokenized stocks could become one of the biggest trends over the next decade. So, anyways, there is so much we have to go through. We have the biggest IPO waves in years. We have AI security risk, Bitcoin latest sell-off. So, let's get started with the first news of today. So, we have to talk about the global financial system, and it's actually changing in front of our very eyes. For decades, if you ask central banks around the world what their safest reserve asset, the answer should be quite simple, being US government bonds. But according to a new report from the European Central Bank, that might no longer be true because gold has officially overtaken US Treasuries as the world's largest reserve asset. So what happened here is that according to the European Central Bank latest report, gold now makes up around 27% of global central bank reserves. That's up from 20% just 1 year ago. Meanwhile, US government bonds have fallen to around 22%, so that is a huge shift because for decades, US Treasuries was considered the backbone of the global financial system. They are the asset government, central banks, and institutions trusted most. Now, gold sits at the top. So, what is happening? Why is this happening in this current stage? So, actually, there are two big reasons. First one is simple: gold has gone up a lot. So if we take a look at gold price here, I mean, it depends on the time frame you're looking at, like last month, past month performance, of course, gold sucks. But if you zoom out to 1 year, is actually up 32%, and 5 years is even more crazy, up 134%. So generally speaking, gold went up a lot, and over the last 2 years, it actually doubled in price. Earlier this year, we saw the all-time high of above $5,500 an ounce. So part of this change is simply rising prices make gold a larger part of the reserve portfolios. But that's not the only story. The second reason is actually more important. Many countries are slowly reducing their dependence on the USD, so on US dollars. And a major turning point happened in 2022. That's after Russia invaded Ukraine, the United States and its allies froze a large portion of Russia's foreign reserves. That move shocked governments around the world because it showed that dollar-based assets could potentially be frozen during geopolitical conflicts. Whether you agree with the decision or not, many countries look at the situation and ask themselves, what if one day that happens to us? And that's when central banks started buying more gold. So, in terms of who is buying, what triggered this massive rally, this all time high, that was literally just in February, so just a few months ago. Well, some of the biggest buyers have been China, have been India, Turkey, and Poland. Since 2022, central banks have been accumulating gold at one of the fastest rates in modern history. Today, global central banks collectively hold more than 36,000 tons of gold. That's close to the levels seen during the Bretton Woods era, when gold played a central role in the international monetary system. So, a lot of people are asking this question: does it mean the dollar, so USD, is in trouble? Well, USD is not that. Let's just be clear about that. The US dollar is still the world's dominant reserve currency. Dollar denominated assets still account for roughly 42% of global reserves, and that's almost half. So, this isn't a story about the dollar collapsing, it's a story about diversification. So, countries are slowly adding alternatives alongside the dollar, and gold is becoming one of these alternatives. So, for investors, this still matter because central banks are some of the biggest and most powerful buyers in the world. When central banks decide they want more gold, they often thinking in decades, not in months. And they aren't trying to trade the next headline. They aren't trading and trying to protect national wealth. And right now, they're trying to protect national wealth instead. So right now, many of them appear to be increasing the exposure to gold. So, final take about this news: the dollar is still king, but gold is making a huge comeback. And for the first time in decades, central banks are holding more gold than US Treasuries. And when the world's biggest financial institutions start changing how they store wealth, it's usually worth paying attention to. All right, so this is one of the big moves for central banks around the world. So another big move we have to talk about in the market is, of course, we have three of the biggest private companies in the world are about to hit the stock market. So they're going IPO together. They could add nearly $4 trillion of value to public markets. So these three companies, of course, I'm talking about Anthropic, SpaceX, and OpenAI, three companies at the center of AI and technology boom. And all three could go public within months of each other. So we'll break down each of these companies. First, let's start with SpaceX. Okay, so the company is reportedly targeting a massive $1.75 trillion valuation and could raise around $75 billion from investors. And then there's Anthropic, the maker of Claude AI, file draft IPO paperwork this week, and is reportedly looking to raise up to $60 billion. And then as for OpenAI, it is expected to follow soon, with reports suggesting it could also target around $60 billion. So if all three IPOs happen at the valuations being discussed, that would add roughly $4 trillion of market value to the US public markets in a very short period of time. That is a huge number, but here's the surprising part. It might not actually be a problem. So for here, let's actually take a look at what Bloomberg's analyst had to say.
Just hit the Bloomberg terminal. The working assumption based on the reporting was SpaceX will price and list in the next 2 weeks, by the end of June at least. Then it was looking like OpenAI could also file confidentially imminently. It never happened, but look at September to go public. And we had previously reported that Anthropic was looking at October to go public. So there is some modeling and math to be done on when those can happen mechanically. But the big number that came out of Anthropic's round last week was revenue run rate at $47 billion. And a lot of the narrative has been Anthropic kind of accelerating beyond OpenAI in terms of its financial performance and the traction that its underlying models and coding products are getting with the world at large. The interesting bit that's changed now is that Anthropic and OpenAI have had time to read SpaceX's S1 and look at what SpaceX is basically saying for its TAM number and how it sees its future in the world. And they've basically, according to the confidential filing, said, you know what, this provides an interesting environment for us to also go public.
All right, so that's his analysis towards the whole IPO boom in the coming months. But the next question is, can the market even handle it? At first glance, $4 trillion sounds enormous, and it is. But the US stock market is even bigger, because think about it. The S&P 500 alone is worth roughly $69 trillion. So while 4 trillion is a huge amount of money, it's still only a small percentage of the overall market. In other words, Wall Street is probably big enough to absorb these IPOs. And now here's the interesting part as well. When a company joins a major stock index, something important happens. So index funds are forced to buy it, not because they want to, not because they think it's cheap, but because that's literally how index funds work. If a company enters the index, the fund has to own it. Millions of investors around the world own index funds through retirement accounts, pensions, ETFs, and investment portfolios, and all of that money automatically follows the index. That's why this matters. So reports suggest that index providers have changed the rules to fast-track companies like SpaceX, like Anthropic, and OpenAI into major benchmarks. That means once those companies become public, there would be automatic demand from funds that track those indexes. We are talking potentially hundreds of billions of dollars flowing into these stocks over time, not because investors woke up one day and decided to buy it, but because that's how it works automatically. And remember, what all three companies have in common. So SpaceX, of course, dominates commercial space. OpenAI is one of the leaders in artificial intelligence. Anthropic is one of OpenAI's biggest competitors. These aren't ordinary IPOs. They are some of the biggest and most talked about technology companies on the planet. And many investors have been waiting years for the chance to buy these shares. Personally, I think the bigger story isn't the money being raised, is what these IPOs say about where the capital is flowing. Just a few years ago, investors were chasing EV, so electric vehicles, crypto startups, metaverse companies. But today, the biggest excitement is around AI and advanced technology. That's where the market believes the future growth is going to come from. So over the next few months, Wall Street could witness one of the biggest waves of IPOs in modern history. So SpaceX, Anthropic, OpenAI, three giants, potentially $4 trillion of value, and millions of investors waiting to just get a piece of them. The question isn't whether investors are interested. The question is whether these companies can eventually grow enough to justify the massive expectations already being priced in. So we know it's going to be an insane time moving ahead. Let me know if you're interested in those IPO because we covered that before on Roxham TV. Like, if so, there are some pre-IPO available on Hyperliquid. Not that I'm suggesting, it's just like some of the news we covered before. But like, anyways, we are taking a short break from here. When we come back, let's take a look at the what's going on a global scale. So different countries have their own problem that they're dealing with. For example, Japan. So Japan has an aging population, and right now is creating some serious problem economically speaking. And for Malaysia, they are also facing a problem while teenager is using social media, and that is concerning. So lots of interesting stuff going on. Make sure to stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxham. One currency, one place.
All right, guys, welcome back to Roxham TV, and thanks for sticking around with us after the break. We now have to talk about a global issue that a lot of countries around the world are facing, so being aging population. And the first one we have to talk about is, of course, Japan. So Japan is disappearing, not overnight, not because people are leaving, but because there simply aren't enough babies being born. And according to new census data, the problem is getting worse. So what happened is that Japan has released new census figures. The country's population now stands at around 123 million people. That's down more than 3 million people in just 5 years. To put that into perspective, that's roughly the equivalent of losing the entire population of Chicago. And this isn't just another decline. It's the fastest population drop Japan has recorded since modern census tracking began over 100 years ago. What's even more concerning is the decline rate. It is accelerating. The previous census showed population losses too, but like this latest drop is more than 3 times worse than the decline recorded in the survey before that. And this is now the third census in a row, like showing Japan's population shrinking. And the problem isn't just Tokyo. And what's interesting is that almost every part of Japan is getting smaller. So out of Japan's 47 districts, only two managed to grow. Like first one, of course, being Tokyo. It is a very a global city that a lot of people like to go to. And that's it. So 2 cities out of 47 districts. And every other region lost population. People continue moving toward major cities while rural areas slowly empty out. Some towns are struggling to keep schools open. Others have more elderly residents than working age adults. So the simple answer here, like why is this happening right now, is that Japan isn't having enough children. For years, the country's birth rate has remained well below the level needed to maintain its population. At the same time, people are living longer, so Japan has more retirees and fewer young workers entering the workforce. That creates a difficult situation because a smaller workforce must support a growing number of elderly citizens. So this is a very concerning, economically speaking. It's not just demographic story. Like fewer workers, what that means is that we'll get less economic growth. We have less consumer spending and fewer taxpayers. At the same time, government spending on healthcare and pensions continue to rise. That puts enormous pressure on public finances. And Japan has already spent years trying to solve that problem. So the government has introduced childcare support, family subsidies, housing incentives, and even some immigration reforms. But so far, none of those efforts have reversed the trend. And a number policymakers, the numbers are very concerning. Like the real concern isn't just Japan is shrinking, is that the shrinking is speeding up. Every census shows a larger decline than the one before. That means Japan isn't stabilizing. It's moving further away from stability. Well, personally, I think Japan is becoming almost like a preview of what many developed countries might face over the next few decades. Countries across Europe are dealing the same thing. So they have falling birth rates. South Korea basically the same as one of the lowest birth rates in the world. China's population has already like started declining, and even many Western countries are facing fewer births and aging populations. Japan just happens to be further down the road than everyone else. It's the first major economy showing us what this future might look like. So the question is, what is the solution? What can we do at this current point as human beings? Is AI the answer? Because we know that GDP going to slow down one way or the other with aging population. So comment down below. Maybe we could start a discussion to see what is the solution might be. All right, so speaking of AI, here with Anthropic, we have to talk about cybersecurity right now. So Anthropic thinks the next cyber war might be starting soon, and they are moving fast to prepare for it. So the AI company behind Claude just announced a major expansion of a program called Project Glasswing. The goal is to use AI to find security holes before hackers do. And according to Anthropic, the clock is ticking. So what has just been announced is that Anthropic is roughly quadrupling the size of the project, Project Glasswing. The program launched back in April, actually, with around 50 different trusted organizations. Now it's adding another 150. That means hundreds of organizations will soon get access to one of Anthropic's most powerful AI tools, so being Mythos. So you could ask, okay, Jamie, what is Mythos? What do you mean? All right, so think of Mythos as an AI cybersecurity investigator. Its job is to scan software and search for hidden weaknesses, the kind of flaws that hackers could use to break into systems. These can be bugs buried deep inside code that human teams might miss, and apparently is already producing results. So the numbers are quite huge. According to Anthropic, organizations using Mythos have already identified more than 10,000 high risk or critical security vulnerabilities. And that's just in 2 months. 10,000 potential weaknesses that could have been exploited by attackers. And that's why security experts are paying attention. And this one, to be fair, is not just for tech companies. Many of new partners operate like critical infrastructure and might use it. So things like power grids, water system, hospitals, communication networks, how about computer hardware systems? In other words, the infrastructure that millions of people depend on every single day. If those systems get hacked, the impact could be massive. And even government right now want access. That's very interesting. They're lining up for these tools. So Anthropic announced this expansion just one day after giving European countries access to the same model. In fact, European Commission officials reportedly traveled to San Francisco last week to meet Anthropic executives directly. That shows how seriously governments are taking AI-powered cybersecurity. And as for why Anthropic is moving so fast, because like we had this news in April, and right now they're adding another 150 organizations, right? And this is the important part. Anthropic says this isn't just about helping defenders, it's about preparing what's coming next. The company believes that within the next 6 to 12 months, other AI labs might release models that are just as powerful at finding security flaws, and some of those systems might not have strong safeguards. That's the concern, because the same AI that helps protect software can also help attackers find ways to break into it. And that is almost like the double edged sword of AI. This is also one of the biggest debates in AI today. Like AI can help security teams identify weaknesses faster than ever, but it can also help hackers discover those same weaknesses. The technology itself is neutral. It depends on who is using it. And as AI becomes more powerful, both sides get stronger. That's why Anthropic says it wants to raise the shield first, meaning give defenders better tools before attackers gain access to similar capabilities. Hence, Anthropic is making a huge bet. The company believes powerful AI cyber tools are becoming coming whether we are ready or not. So the strategy is quite simple here, is to help defenders first, because in the future, cyber attacks might not just come from human hackers, they might come from AI systems as well. And whoever learns to use AI for defense first could have a huge advantage in cybersecurity battles ahead. All right, so I do want to shift gears and take a look at Malaysia, what is happening into one of the Asian countries around the world. So it's not just Asia, but like we are seeing a trend that globally speaking, different countries are banning social media for teenager, and Malaysia just happened to join the queue right now. And this is raising a much bigger question. Should governments be protecting kids from social media, or should that responsibility belong entirely to parents? Because around the world, more and more countries are deciding like they can no longer leave that decision to families alone. So what just happened is that Malaysia has officially introduced a new law that prevents children under the age of 16 from registering social media accounts. That rule applies to platforms with more than 8 million users in the country. So that would, of course, include things like Facebook, Instagram, TikTok, YouTube, and several others. If platforms fail to verify a user's age properly, they could face fines of up to $2.5 million. So, as for how Malaysia is enforcing it, like Malaysia plans to use identity verification. So, users might need to provide a national ID or a passport just to prove they're old enough to create a social media account. Now, obviously, this immediately raises concerns about privacy. A lot of people are uncomfortable with the idea of handing over government identification just to use social media. And that's still one of the biggest debates surrounding these laws right now. So you could ask, like, can't we just leave this decision to the parents? What about parents? What are they playing in this role? Interestingly, the law does not punish parents if their children find ways to go around the system, which raises a question. Is the government basically saying parents are not really responsible for managing their children's online behavior? At first glance, that sounds controversial, but when you look at the data, many parents actually seem want some help from the government. So it's not alone, as I mentioned, like many countries are doing the same thing. Australia introduced a similar social media ban for children under 16. And according to polling, around 77% of Australians supported the idea. And Europe support is also surprisingly high. So recent surveys show 79% support in France and 76% in the UK, and strong support across Germany, Italy, and Spain. Even in the United States, where people are often skeptical of government involvement, the numbers are very interesting. So research shows most parents support stronger protections for children online. Many support parental consent requirements, and many believe new laws are needed. So, a question I'm asking here, like when I saw news or many countries are joining this global trend, like why are parents asking for help? Well, it turns out like social media today is very different from what it was 10 or 15 years ago. Parents these days, they are worried about like screen addiction, cyberbullying, mental health, online predators, or algorithm basically to decide to get children, or not just children, but everyone addicted to the screen. Many parents feel like they are fighting against billion-dollar technology companies that spend enormous amounts of money making apps as engaging or addicting as possible. And some simply don't think they can handle that battle alone. That's why they're trying to have the government involved. So the bigger question, like I think the most interesting part is the story of this story isn't the law itself, it's what the law says about society. When millions of parents start asking governments to please step in, that is a signal. It suggests many people believe the problem has become too large for individual families to solve on their own. So whether you agree or disagree with this law is an important shift. And now, to be fair, the critics have valid concern as well. Like the privacy issue is real. Some ID verification just for me to create an Instagram account. I don't know about that, but let's be honest. Teenagers are very good at finding ways to go around these rules. Many will probably try to use VPNs or borrow someone account or other workarounds. So no system is perfect. But what I witness here is that obviously the trend is quite clear. More countries are moving to an age restriction for social media, not because governments suddenly want more control, because they never change, they always want control, but because many parents are asking for backup. The debate over privacy, surveillance, and online freedom isn't going away, but neither are concerns about what social media is doing to younger generations. And that's why we're likely to see more countries to follow suit of Australia, UK, and Malaysia in the years ahead. All right, so we'll take a short break from here. When we come back, we have to talk about Bitcoin because Bitcoin has an issue. Bitcoin literally just crashed below $66,000, and right now we're trying to still recovering. So we'll use different analysis. We'll use different TA. We'll look at the chart and see where possibly Bitcoin is going. So if you're intrigued and you want to find out more, make sure to stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Alright guys, welcome back to Roxum TV and thanks for sticking around with us after the break. We now have to talk about Bitcoin because Bitcoin is crashing and literally after yesterday's show, it crashed below $66,000. And yesterday's show, it was very interesting because we were looking at the daily Bitcoin chart and we were telling everyone about some flash warning signs that momentum was weakening, buyers were losing control. And yeah, I said there was a good chance Bitcoin could move lower. And luckily, oh, not luckily, but yeah, I mean, wish I could say I told you so. Like if you guys are trading, congratulations. But what happened today is that Bitcoin crashed to like somewhere around $65,000, 65.2. It depends on what exchange you use. So Ethereum dropped below $1,900 and nearly every major crypto asset got hit. So people are asking what happened. And more importantly, is it just another correction or is something bigger going on we have to look at? So to answer that very complex question, why is Bitcoin crashing? We have to look at multiple different data. So first of all, let's start with the liquidation heat map. So one thing we notice is that, well, according to the 24-hour, the amount of money got wrecked, we topped $1.8 billion. That is, of course, a lot of money. And most of that is coming from long positions. So a lot of long position got wrecked in the past 24 hours. And according to this heat map, BTC came in hot because most of the long position in BTC got liquidated. And people, that what it means is that people betting price would go higher. And turns out more than 278,000 traders were liquidated. This is what happens when leverage gets too crowded on one side. Prices start falling, liquidation kicks in, forced selling pushes prices even lower, and that creates a chain reaction. So this is one reason for liquidation. And then the second reason, like this one worries me. We have to look at the reason why Bitcoin had the big support in this cycle. So for this cycle, we have two major buyers. Think about it. So the first one is the ETF buyers. The most well-known one is of course like BlackRock, and then we have Michael Saylor, so MicroStrategy. Today, both stories look very weak, like weaker, not very weak. Let's start with ETF first. So if we take a look at these graphs, you will see a lot of red number forming in recent days. And if we scroll up to see the outflow, oh my gosh, look at this, it's all red. So that means a lot of outflow. So for Bitcoin ETFs, turns out we have now recorded 11 straight trading days of net outflows. Over that period, roughly $3.4 billion has left Bitcoin ETFs. Even BlackRock's IBIT saw more than $440 million leave in a single day. That's important because ETFs were one of the biggest sources of demand during the cycle. When money was flowing in, Bitcoin has support. When money starts flowing out, that support disappears. And then So speaking of the support for this current Bitcoin cycle, another one we have to talk about is, of course, like Bitcoin's treasury company, and the number one is Michael Saylor. We talked about that on yesterday's live stream. So what is going on, why Michael Saylor is selling. So for years, I would say Michael Saylor's message was quite simple. We literally played out a clip yesterday. So back in 2021, so we had Michael Saylor on the conference, so on the stage, to say never sell your Bitcoin. So buy Bitcoin only, never sell Bitcoin. At least that was the narrative in the previous cycle back in 2021. But today, literally this week, so on 1st of June, Michael Saylor sold 32 Bitcoin. Now, to be clear, 32 Bitcoin is nothing compared to more than, like, look at this, 843,000 BTC to hold. Financially speaking, it doesn't matter. But psychologically speaking, because people will think, people are a little bit salty, and they care about the message rather than the actual figure they are looking at. So psychology speaking, it matters because Michael Saylor did say that you should never sell your Bitcoin. Like, to be fair, I think that statement is a little bit misleading, because like us being in finance for a little bit longer, or in crypto a little bit longer, we know what Michael Saylor was, how he meant. But the phrasing wise, of course, it creates a lot of hype. So it creates a lot of anticipation that Michael Saylor would never sell, But like we know at one point, like running a business, that is a lot of responsibility. And again, like 32 Bitcoin, it is nothing. So for myself, I'm not too concerned, but markets pay attention to narrative shifts. So that's why it is not helping with Bitcoin's price. All right, so here we have another reason we just talked about. And zooming out, like throughout this 1 hour segment, we have been talking about AI like numerous times, and not just today's show. Like we talk about AI for a couple months here on Roxham TV as well. So the reason why we're talking about that is because the narrative has changed. If we zoom out, like there's another theme that's happening right now. Money is flowing into stocks, especially AI stocks. The S&P 500, like we are looking at the weekly candle, and not gonna lie, I'm a little bit salty looking at the candle right now. So it's keep making new all-time high. So S&P 500 is sitting at 7,600, 7,600 point. Nasdaq keeps breaking new all-time high. AI companies are raising huge amounts of money. So Nvidia, Anthropic, OpenAI, Google, the entire AI trade is attracting global capital. Meanwhile, crypto is struggling to compete for attention. In fact, many crypto exchanges, we again talk about that in previous shows on Roxham TV. So many crypto exchanges are now launching stock trading. So Binance, Coinbase, Kraken, they are all moving towards traditional markets. And honestly, that tells you where the demand is right now. Like investors are chasing AI, not crypto, not Bitcoin, at least for the moment being. And here comes like another reason, being the Middle East. So Middle East tension is not helping neither. That is the macro picture. The Middle East situation is heating up yet again. So the US and Iran continue exchanging threats. Military activity has increased. Oil price remain elevated, and investors are becoming more risk off. When uncertainty rises, speculative assets like Bitcoin usually get hit first. And unfortunately, crypto is still viewed as a very risky asset by many institutions. So hence, we are seeing this at this crash for Bitcoin's price right now. Well, personally, I don't think today's crash happened because of one headline. And we talked about that in yesterday's show. Like, it feels like this market is already weak. Like the technicals, we are looking at the chart on a weekly basis here on Roxham TV. I was doing chart analysis and I was telling viewers that technicals were weakening, ETF demand was fading, leverage was overcrowded, and then negative headlines gave traders an excuse to sell. So the market was already vulnerable. the news simply push it over the edge. And that's why I always say like news creates the trigger, but the charts often tell you where the pressure already exists. And yesterday, the chart was warning us the pressure was building. So there are key levels. So as for the daily candle, uh, I always separate into daily and weekly because daily it tells us where the short term is possibly going, like short term wise for Bitcoin's price. Weekly, we are zooming out to a long term mentality. So again, I'm long term bullish on Bitcoin, but like if you want to make some profit short term wise, I would start with a daily. Or if you are really stick to your screen, then maybe hourly chart, or some people will do 5 minute chart. So it depends on your time frame you're looking at and your purpose and how often you could look at the market. So, anyways, for the daily, I talk about some weaknesses that I saw. So first being, actually, let me zoom out a little bit. So what I've got here is that we have the EMA line here. So the orange line being the 50 EMA, and then the blue line being the 200 EMA. So I just want to focus on the blue line right now. So because we have a major resistance, so back in, wait, when was this? So that was mid-May or early May, we had a strong rally. So we pumped up to $82,000 for Bitcoin. Like everyone was so hyped and so happy, like a bear market is officially over. The 4-year cycle is no longer valid and it's no longer intact because we are going to better places. But however, what I saw is that for the weekly candle, we are basically using the 200 EMA, so 200-day moving average, as resistance, and then we got rejected. And this is weakness number one. So here, weakness number one, I'll talk about that in previous shows. Weakness number two is that right now we have officially lost the daily uptrend. So this is the uptrend that we have built up since 5th of February. So that was like months of building up this uptrend. And yesterday, because yesterday's show we talk about the this uptrend as well, but like we haven't closed that daily candle yet, so I couldn't call it as a confirmed weakness. But right now, as we have closed that, today is Wednesday, so that's why it's a confirmed weakness. So weakness number two, and weakness number three is that we pull up the daily RSI. So this is again, like I draw this weeks ago since we're building up so much momentum here. But like the moment we lost that, and this is like think about it, this is a leading indicator. So the RSI actually flashed that first. So the daily RSI right here, that is a horrible drawing. Okay, what I could do is that I could find a vertical line. That is the least I could do. All right, so that is like a leading signal on the RSI that we have officially lost that building support, lost that momentum. So we're going to lower places. So this is weakness number three I'm seeing on the daily chart. So you could be like, okay, Jamie, like how low can we go? That is a question people like to ask as well. So to answer the question, well, actually, let me close the EMA first. So I have a cleaner chart. So what I've done yesterday is that for the daily RSI, there's a key level we have to look at. So being 30. So on the daily RSI, whenever we drop below 30 or touch that point, we'll go even lower for the price. We have done the analysis yesterday. So when we lose the 30 on the daily RSI, we'll go down for another 12% to 38%. So that is the rough frame that we could use it as reference. I'm not suggesting that we'll for sure go down 12% from here or 38% from here, but that is a rough estimate because it happens every single time in any previous cycle or any previous time that we drop to 30 on the daily RSI. So simply using that, having that bear in mind, and if we take the point that we lost the rising support, And if we do just like 12% to 13%, that will bring us to $62,000. So in other words speaking, I'm going to put a support trend here. So $62,000 is the support that I'm watching. And then since the estimate go all the way to like from 12% to 38%, so that is a very rough estimate what we are watching right here. So if we go down to 38%, that will bring us to 43.8K. This is somewhere close to a level that I put basically months ago. I'm watching 44,000 very closely. The reason why is because like I do see we managed to find some resistance, and of course the previous resistance, it will be our future support. So I'm not saying the cycle bottom would be $44,000. No one has a crystal ball yet again, but like if we lose 62K, like again this level, it means the support level. So if we lose that, it just showcases Bitcoin has more weakness. So there is more room to go down. Like it's much easier to go down than it is to break key resistance. So that's what it means. All right, so that's my analysis for Bitcoin. And what I mentioned, so I mentioned about the Binance situation because like right now we don't have much attention in Bitcoin or crypto, and all the attention is going to stocks. And all the evidence is that I mentioned, like Binance launches US stocks. And let's take a look at that because something interesting, and a lot of people, a lot of analysts online, that I feel like they're missing this detail about alpaca. So let me explain. So yesterday we talked about Binance letting users around the world, not non-US users, to buy US stocks. So that being Apple or Nvidia, Tesla. So over 8,000 stocks and ETFs directly into the Binance app. And a lot of viewers were asking, like, wait a minute, how does it actually work? Is Binance really holding all these stocks? Well, the answer is not exactly, because behind the scenes, there is a company that people have never heard of, and it's called Alpaca. And honestly, it might be one of the most important companies connecting crypto and TradFi right now. So who is Alpaca? Think of Alpaca as the plumbing behind the system. When a Binance user buys a stock, Alpaca is the company handling much of the heavy weight. So things like all the execution, settlement, custody, dividend payments, and connecting everything back to the US stock market. In simple terms, Binance is the front end and Alpaca is the big part of that back end. So Binance, of course, would need Alpaca because like buying real US stocks isn't as simple as buying Bitcoin. Stocks are heavily regulated. There are rules around custody, settlement, investor protection, and compliance. Alpaca, what they offer is that they already have the license and infrastructure needed to operate inside the US security system. So instead of building everything from scratch, Binance can just plug into Alpaca's network. So think of it like Stripe for stock trading. Many companies use Stripe to process payments, and many fintech companies now use Alpaca to access stock markets. And Binance isn't the only company using them. So Kraken is using them, Ondo Finance, Backed Finance, and many other tokenized stock projects are working with Alpaca. In fact, according to the company, it supports roughly 94% of tokenized US stock market. That is an incredible number, which means when people talk about tokenized stocks, there is a very good chance Alpaca is involved somewhere behind the background. So here's another interesting dynamic that Binance is offering stocks. So the stock trading feature Binance launched literally this week is one thing, but the bigger story is actually B stocks. So that's Binance upcoming tokenized stock product. The idea is simple. So you buy a real stock, then the stock can be represented on-chain as a token. That token can potentially move around the blockchain 24 hours a day, 7 days a week, even when stock markets are closed. And that is a very different experience from TradFi. Honestly, I think like this is where finance is heading. Like not crypto replacing TradFi, not TradFi replacing crypto, but like the two merging together. We're gonna get one app, one account where you can hold Bitcoin, Nvidia shares, gold, treasury bonds, and stablecoins all in the same place. And that's what Binance is trying to build. And companies like Alpaca, they are providing the infrastructure to simply make that happen. Now, before everyone gets too excited, like this market is still very early. Like tokenized stocks aren't exactly the same as directly owning shares through a traditional broker. Regulations are still evolving, liquidity is still developing, and a lot of infrastructure is concentrated among only a few providers. So if one major provider has problems, the entire ecosystem could feel the same impact. So investors should still understand what they're buying. That's what I'm trying to say. So Finaltech, like most people, have never even heard of Alpaca. But if tokenized stocks are becoming like one of the biggest trends of this decade, Alpaca might end up being one of the most important infrastructure companies in finance. Because while everyone is watching Bitcoin, Nvidia, and Binance, the real winners are often the companies quietly building the rails underneath the system. So perhaps we just found another picks and shovels. If you know what I mean, you probably watched my previous shows. So being Serenity, finding the early gems in stock market. But anyways, that's pretty much all I want to cover in today's show. So before you go, make sure to give us a follow on X. My X is _crypto_IO. Make sure to follow Roxham TV as well. So Roxham TV, okay, right here. We're doing live now. So you should follow us because we don't cover just Bitcoin. We talk about AI, we talk about finance, we talk about all the global trends. So we have prominent guests joining our show on a daily basis. So point being, you won't regret following us on X. And also make sure to subscribe on YouTube if you haven't already. And as for my show, I'm live here Monday through Friday, starting at 3 a.m. Eastern Time. If you don't manage to catch my shows live, don't worry, the recorded versions are also available on both channels. So being Jam Crypto YouTube channel and also Roxham TV channel. Thank you guys for watching. I hope you guys have a fantastic day and see you guys in tomorrow's show.